Let's talk real estate with Daryl King. The Toronto Blue Jays are sort of like the Toronto real estate market. They're sort of in a bit of a slump, right? So, with the higher borrowing costs that are out there now imposed upon the market, it's impacted home sales substantially. Sales totaled 6,474, down by 41% compared to last year's record-breaking pace. So, we can't always have record-breaking paces year in, month and month. So there's going to be some changes. And, with the season, now we're into June versus May, which May is one of our best months. So summer months are generally typical, a little bit slower. So, the average selling price still is $1,146,254. That remained 5.3% compared to June 2021. So that's an increase of $57,263 net value that you attained with no taxes that you have to pay on that. So still a pretty good place to invest, and you still have your home. Annual price growth was driven more by less expensive market segments, including townhouses and condominium apartments. So the lower segments are still driving the market right now more so than the bigger places. So home sales have been impacted by both the affordability challenge presented by mortgage rate hikes and the psychological effect where home buyers who can afford the higher borrowing costs have put their decision sort of on a stall moment to see where prices end up, right? So expect current market conditions to remain in place during the slower summer months. Once home prices stabilize, some buyers will re-enter the market despite the higher borrowing costs. Listen, if you look back in history, the borrowing costs were much higher than they still are today. We've been spoiled where money was almost free at the rates that it was at. So once people get over that psychological part of it, they'll come back to the market. Because if they keep raising the rates, then you can afford less anyway. So you might as well jump in there now and buy it now while the rates are here and prices are here. Well, the number of transactions were down year over year. The number of new listings was little change over the same period. So new listings were 16,347 in 2021, 16,193. So almost identical, right? So 1% change. Listings will be an important indicator to watch over the next few months. With the unemployment rate low, that means people have jobs, which is great to hear. The majority of households aren't in a position where they need to sell their home. Lots of people I know, I talk to, they don't have to sell their house, but they would like to make a change. So, what I always try to tell everybody, you sell today, you buy today. It doesn't really affect you either way. So if sellers decide to take a wait and see attitude over the next few months, it's possible that active listings could go down, and then this could cause market conditions somewhat to increase again because there's fewer homes on the market. But our region continues to grow because we attract people in business from all over the world. Remember, immigration is still going to be coming in here big time. In the next probably year, we're going to have over 1 million people, or 2 years, 1 million people. And a lot of those will go to the Toronto and GTA. So there's just not enough homes regardless. So whether they choose to buy or rent, despite the shorter term impact of higher borrowing costs, housing demand will remain strong over the long term. As long as we can produce homes which people can live, policymakers at all levels will need to make this their key goal. So, that's all the government levels of creating affordable housing and opening up for the builders that they can develop. So, if we looked at sales, we know they're down 41.4, but we know that last year was an absolutely record-breaking. It was by far the very best year in real estate history. If we look at the big areas, Toronto, they had 2,422 sales for an average price of $1,152,000. Now, Peel Region, the other big city, 1,172 for an average price of $1,101,178. And then in York Region, we're still over the 1,000 sales, 1,011 for an average price of $1,307,857. So again, like I said, York Region has lots more houses. That's why it's always up in a higher bracket there. You know, then you look at out in Durham, they went under 1,000 sales for the first time in so long, because that place has been on fire and the affordability was that much greater. So that average is sales were 967, and their average now dropped to just under $1 million at 969,424. So, you know, more and more people will jump out there again if they can find accommodations. Simcoe, again, 2 boards, Toronto board and the Simcoe board. So that's like Barrie and, you know, all that northern thing. So they report 196 sales for an average of $1,012,906. So what does that mean to everybody? Well, yeah, it means a lot because, you know, your home is your largest investment and it's still a sound place. You know, as I tell people, 11 years ago, if you had bought, your average house price was $431,000. Last year, it ended up at $1,097,000. As we speak right now, it's at $1,146,254. Been up over $650,000 in net. That's money in the bank, really, or better than money in the bank because your house is very sound. You know, you had to rent it, what it cost you an average of $300,000. So you're $1 million sway owning or renting. So which is a better investment? So if you're thinking about buying, selling, an investment, or you want to find out more accurately what's going on in the marketplace today, please feel free to give me a call at 905-907-5464. Our home's at darylking.com, and we'd be happy to let you know what's happening realistically today. Take care, have an amazing summer, and we'll talk to you real soon. Bye-bye.